You were listening to ChartingWealth.com for Thursday, the 17th of March, 2016. I apologize for speaking so softly, but I am literally flying out of JFK on a late flight, and this is the first chance I've had to record our podcast today, so bear with me. We start, as we always do, with IYY. We see that the market continues to move up. We have had a crossover going up on the large two-day chart since the 16th of February, and those of you who got in then have made good progress as far as your virtual trades go. Let's see, where was the market's low that day? 91.98, and the market topped off today somewhere at a high of 101.26. So we have seen some nice progress in the total market. Up again throughout the course of the day, the total market up 0.7% for the day. And when we look at the intraday movement, what do we see? We see that the market is still crossover going down as it did back on the 15th. It is trying to make its way to crossover going back up, still above the two-day trend line. Like we said, the market's up 0.7%. We're going to switch over now on the two-day chart to SPY. What do we see? It was up almost 0.6% for the day. Again, it crossed over at the same time as the total market on the 16th of February. It's continued to move up steadily since then, still above the two-day trend line. If we look at the intraday chart, what do we see going on? Well, we see that the market was up in the morning and in the afternoon, getting close to crossing over, going back up. Derivative oscillator is actually gaining energy, and it appears that a crossover going up is about to happen. We are still above the two-day trend line, and of course we have a long-term up movement on the chart. So hopefully you got in at the appropriate time when the market turned over around on the 14th, and you were watching your position increase in value on your virtual trade. Now, let's take a look at the Qs. What are the Qs? That is the NASDAQ 100. It was up 0.89% for the day. It crossed over 2 days later on our two-day chart on the 18th of February. It's been going up pretty much since then. Rotated sideways for a few days starting around the 7th of March, but then started moving back up again on the 11th. And if we look at the intraday chart throughout the course of the day, up in the morning, strongly up in the afternoon, about double as high as it closed out. Derivative oscillators heating up, and we're still in the positive on our 4-hour chart that rotated over going up on the 14th of March. So that one is clearly the kind of pattern we like to see. Now lastly, we're going to take a look at gold on our two-day chart, see where it is. Gold was up 2.23% for the day. The two-day chart has crossed over going down back on the 15th. It appears to be trying its best to start moving back up again, but it's not done that yet. Derivative oscillators still down. The chart, the MACD has run parallel to the signal line. We don't have a crossover going up, even though gold was up strong for the day. If we look at the 4-hour chart, we can see how gold bounded up in the afternoon, actually rose about 2.5 times as high as it settled out on our Hinken-Ashi chart, our Hinken-Ashi candle. So that is where we are. It's still not crossed over going back up yet, so we don't call that on the short or the long chart. That is where we ended up the day on Wednesday as we go into the 17th Thursday. Hope that you're having a good week, that you're watching the market rotate back over on that short chart to give you an entry point on the long chart. We so appreciate having you with us. All you've got to do to join us every day is to go to chartingwealth.com, sign up for our daily newsletter. We'll be happy to send it to you along with how to read a stock chart video and the layout that we use at freestockcharts.com. Thanks so much for joining us. Have any questions, concerns, issues, email us, follow us on Facebook, Twitter, Instagram, YouTube, you name it, we are there. Thanks so much for your patience and for joining us today as I'm busy traveling. Take care.